Wednesday, May 14th, market analysis. Stan Ehrlich, good morning. We start out with the stock market indexes and go to futures, and I've got a few stocks that I've been monitoring, Tesla, a couple others, Apple. Now, in the last couple of days, the stock market indexes have gotten overbought, in particular, Monday, Tuesday, and again today for the most part. We are bumping up against a resistance area on the E-mini at yesterday's highs, which are for all practical purposes almost exactly the same again today. Resistance level is stopping it so far, but we don't have any downside breakout. We don't have any particularly bearish formation in the last 36 hours. Essentially 7:20 yesterday afternoon, morning that is. Yeah, PM yesterday, that is. So, no, it's AM. The point is, it's not getting any further. It's stopping at the same levels. How many times? 1, 2, 3, 4, 5. You can count it 6, 7, 8, whatever. Very close. If we get through this resistance level, it could have another pop up, another sharp, quick rally, and get even more overbought. At the moment, we need to start the bearish move off with a move below 58.92. That would be my first fairly minor downside breakout. We really, really want to get below yesterday's low, and that's 58.34-ish. That would create almost a bearish engulfing. But since today's high is not higher than yesterday's high, it's not going to turn red, but super, super close. All right. SPY also not higher than yesterday, extremely close. A little bit above a resistance area, true, and the second day it's up there, and it's up a little, a 1.25, no big deal. So I'm very skeptical that it's going to maintain this. But again, one more push up. It can get even more overbought, but we are in the low 80s, 82-ish for the RSI, which is very high. Not incredible. The last time we were there was December 9th. Yeah, in the ballpark. And the market did top out. Took it about a week, and then we had a huge sharp break. And then a buy single. So anyway, I still think we're very, very close to turning down at any moment. Here is the 1-minute chart. And as you can see, having a problem with these price levels for the moment. Need to start dropping below 585, 80-ish. Then we're probably going to challenge the very, very important levels of yesterday's lows and lower. But again, no higher high, no bearish engulfing, just super close. What about the QQQ? We have been above yesterday's high. Therefore, overbought conditions are producing a very ripe circumstance for a bearish engulfing that would turn red. That would look like something like November 11th. But we need to get below yesterday's low. That's the trigger point. We've got everything else. General resistance area, overbought condition, higher high. Just need to have that bearish engulfing. Next, no particular sign is starting, to my interpretation. This has been starting to make new highs for the day a second time. Looking for maybe another move up. I got to get below approximately 515 to really start something rolling on the bearish side, and pretty quickly too. NASDAQ futures the same as you would expect, and it's still holding in a generalized broad resistance area. I don't have any markings for it, but we're just basically talking about the tops in July of last summer and two other highs that are a little bit higher in November and about the same in February. So this broad area is totally a bunch of resistance. In particular, 21,640-ish. Next, coming up okay. Don't see anything here that's causing me to scream bloody murder bearish at the moment. The Russell, on the other hand, on the other hand, has gotten below yesterday's low, is starting to dip off a little bit, came down the most of the other indexes yesterday, could not quite make a higher high, resistance level pretty accurate, stopped it day before yesterday, and that's Monday, and basically yesterday as well. And now we're making lower lows than yesterday. So no reversals, but it is coming down out of an overbought condition and should come down a little bit more, 41,611-ish to close the gap, and maybe even down to here at 41,215-ish. So we'll see if it can have some more downside follow through, which definitely implies the other indexes are going to be slipping at the same time, if they can. Next, YM. That looks to me like, lower highs, lower lows. I know it's only 2 days worth, but that's how they start. Next, Russell. Kind of the same thing as the DYM. No higher high, still overbought, and in a resistance area that seems to be stopping it with the gap below the market to close. So at the moment, the YM and the Russell look very similar for similar reasons. Expecting a little bit more dip here. But again, I'm not seeing anything yet on the S&P or the NQ that would support this. Next, Russell, 1 minute. Needs to break down a little bit more. Started to. Just as long as it makes new lows again, looking weaker. Otherwise, you do have the lower highs over time, and so flat support level just needs to be broken. Okay, bonds. Another new low. We are down now to a 12.5-ish, 112.5. Getting close to a support line, bullish support line, getting close to previous lows, and now, for the first time, oversold. So we're starting now to look for buy signals at certain levels, and 111.18 looks very, very interesting, as well as just a little lower than that, 111.10, which might even be a couple of ticks higher in a few days. So that level for two reasons, 111.5-ish down to a third, 111.10-ish, trend lines, previous lows, and we are now oversold. So one more drive down, getting a little bit more oversold, could get to those levels and turn back up. Next, we're now also oversold for the first time in 10-year notes. It does have another low of significance at 109, 10-ish, and that would be my first expectation for a bounce. So today's the day that it gets oversold for the first time in a while, actually since last January. Okay. Crude oil. We had a buy signal May 8th. Next day up, next day up, next day up. Today we are down just a hair, but we're close to the high of the day and recovering quite a bit from the low earlier in the day. So it's coming around pretty firm. It might even close higher on the day. All it does to do is go up a bit more, and it could even make another new high for it to move up. So far, every single day has been up, except at the moment, with the possibility of it being another one since our bullish engulfing green bar. It has done great, and it might do a lot better. Don't know. But I got a problem. We could get overbought if it pops up in another day or two up to 64.60 quickly, and that could drive it into overbought condition at resistance. So That would be my first expectation for some sort of a dip back down again, that resistance area, 64, 60, 70. Okay, we're now overbought on heating oil. The bullish engulfing buy signal I talked about on the day that it happened has had 1, 2, 3, and today very much so, 4 up days in a row after the signal day. No problem here whatsoever. Looking extremely good. Results from the signal. Even went through a resistance area and shot up a bit more. Might have a little bit more burn off here to the upside before it can start dipping down, but because it's the first day overbought, I am obviously looking for places for it to stop rallying. Although it looks like it's not necessarily within reach, it certainly could be. 2.2923, maybe a little bit lower, but that would be by first shot. And today's high right now looks modestly interesting, but I don't think so. So yeah, 1 more sharp, 2 more sharp up days, hit the resistance level and still overbought. See what happens. This is interesting. Natural gas is making a minor new low for a few days and coming down from what I have talked about now for 3 days, maybe 4, that the rally high could have been very significant. It is almost exactly the same price it should be, could be, and it has been so far. And the timing, I think, was off like 2 days, which is remarkably close to the exact same number of days from the highest high to the for the shoulder, and the highest high for the formation, the head of the formation, number of days, amount of time, could be the same. Often is very close to the same if you measure from the high day to the right into the future. That's before this all happens, when you might find a last shoulder and you know the price should be in the ballpark of where the first shoulder was, in a very broad sense. This happens to be almost a bullseye in both cases. Very unusual. If I were to have drawn, and I have in the past on various charts, a circle into the future when I expected the market to go back down to or up into and turn around, this rally high 4 days ago, 3 days ago, would have been almost dead in the middle of my circle. And that's how I would have drawn it. A few days early, a few days late, left or right, and giving it a little elbow room for a little higher high, or maybe not quite up as much, and you end up with a circle right in that damn ballpark. Wow. So far, so good. Let's see how this pans out. You know the downside forecast is ridiculous. It's 0.95. So I'm a little skeptical as to whether it's going to really go down that far. But so far, so good. And we're not even close to oversold, so watch out. This could keep going down if the pattern continues to do what it's supposed to do next. Gold's making minor new lows and broke a minor support level, so my first downside objective is now being surpassed. I'm now looking for a move down to about 29.97. Let's call it 3,000 or a little under. We're nowhere near oversold at 37, so I think I got lots of elbow room. The next day or 2 or 3 could be down pretty sharp. Maybe half that distance from where it is right now to my 3,000. Next, we're looking at silver. Daily vertical bar chart, of course, or I'm at candlestick. And attempts to get above resistance failed twice lately, last couple of weeks. Now we're back down to support and hanging right in there at the moment again. We dipped down a little bit lower, but we're still bouncing off the water level surface, so to speak. Closing near the low of the day would be a lot more interesting from a bearish point of view. That could be a new low close for weeks. All we have to do is go back to the low of the day or lower. And then you have more downside breakout probabilities. Looking for lower levels. Move down to 31. I got to have the breakout, though. Otherwise, we're going to bounce right off of where you're sitting. Platinum. Higher high than yesterday, but not holding it. Lower on the day. No bearish engulfing. Nowhere near oversold. We're in a rock and a hard spot, but this kind of, maybe we're going to make a low lower than yesterday's low and get a bearish engulfing. That would be, it'll add a lot more bearishness for the moment to my expectations, but and it's between a rock and a hard spot. At the moment, I've been flip-flopping around here probably because of upside breakouts that have failed and support that has got chewed away at a little bit sometimes. Same thing for resistance. So keep your mouth shut. Next, high-grade copper. That's very identical to platinum. It's added a little support. It doesn't seem to be doing anything lately. Market's not paying attention to that price level at all. I probably should remove this. Why not? Doesn't look relevant lately at all. Okay, so resistance above, support below. They've been doing well. What's wrong with dipping back to support again? Next, grain markets. I only got 2 out of the 6 that's doing good. That's 5. That was the beans, oil, meal, corn, and wheat. Wheat looks terrible. Corn's not looking too damn good anymore. Meal is looking terrible like wheat. Oil and beans. Beans are now overbought. It's a new high for a couple of months. The head and shoulder bottom formation, or you could call it a double bottom. You want to go December and April for the 2 lows, fine with me. It's not going to change the upside objectives very much, and the breakout levels are almost identical, considering the neckline is very close to being flat, but not quite. So the breakouts are the same, basically, give or take probably a nickel or something. If we close above, let's call it 1110 to be on the safe side, we're going to get a breakout to the upside that says soybeans should go up to 1240-ish. Now, all's well and good, but we got overbought today. And we have another, above today's high of 80, we have another 30 cents more to break out, which is not huge. So be on your toes, except overbought conditions imply that we might get a little bit stronger for a very short period of time. And that implies we're not going to get strong enough to break out, but approach, twist back down a little bit, have a little downside correction, about a day, 2, 3, 4, 5 maybe, and turn back up again. That next move up would be the breakout move. And it might even break out straight away. It doesn't have to stop at the neckline just because it's overbought. That's not uncommon, remember, for breakouts of patterns to be overbought or oversold accordingly on the day of a breakout. You usually do have some sort of move in advance of that, and then all of a sudden, swoosh, new highs or lows, breaking lines, a variety of situations. Okay, next. Soybean oil has broken out yesterday. This should have been the start of the head and shoulder bottom bull move all the way up to 1270. I'm sorry, 6270. Not 12. So we are up again at the moment today, a bit more, with a minor new high. And for the first time, getting overbought. Today's low is almost exactly back to the neckline, although I do not count that as the test of the neckline. It's not usually the day after. Let me zoom in here a little bit. It's not typically the day after the breakout. So this so far is acting very normal, except maybe a little stronger, quicker, getting a little more overbought. So the point is, today's low should not be broken. So theoretically, do something you know what to do, just above today's lows, with a relatively tight protective stop, period. All right. Typical trading strategy, I'm sure, is written up in many, many different books over the years. That's for long-term trading and also maybe a very short-term scalp as well. Okay, so what are we looking at? Soybean meal. Just doesn't have it. We made another new low by a little bit today. We're about to make a new low close, it looks like, for a long, long time. And it just doesn't have any oversold conditions. I think soybean meal is just going to continue to chew its way lower, similar to what it's been doing, oh, I don't know, since February. I can't come up with anything bullish to say to speak of. Yeah, support at previous lows, possible double bottom. Maybe we'll get a bullish engulfing. Yesterday was an outside down day, bearish engulfing. Okay, corn made a new low for the move down yesterday, hit support, and so far it's holding. So we made a low today a little higher than yesterday's low and right smack on the support level line, the beginning of it, which is interesting. It tends to support my support level pick number. But it's a doji. Today's high is no higher than yesterday, although very close. We're just barely a little higher in the day. That's not much. And are we turning around and heading back up again? Well, the important level is going to be 450. If you start closing above 450, above these previous lows, then you have pushed your way through a minor resistance level. Probably should drag this to the right a little bit more. Yep, just about like that. Good. And then that becomes a minor level of support after your close above 450. So you're going to bang yourself against that resistance and so on. But if everything works higher from here, it'll be way off the timing, which was idealistically February 28th for the low. And I was very encouraged when on March 4th, just a few days late, on a very big 1-year pattern, being a few days off is nothing, did have a low and oversold, started to rally very nicely for several days, then scary, came all the way down and ended up with a green bullish engulfing double bottom formation, which did start to break out to the upside. Unfortunately, a little layer of resistance and overbought conditions combined to produce this whole damn move down and broke support and made new lows. Now, frankly, 2 months later than a shoulder low should have been, timing-wise. So the pattern's very skew if this is a bottom, and I doubt it. Timing is way too far off. Maybe it'll be something else later on, but I'm probably going to have to remove these markings for the blue ones here. I'm going to do it now. There's not much to say here. So it's the small pattern that did work great down here. That one had no problem whatsoever. It got all the way up to its minimum objective and went a little bit further. And I helped you out with that one as it was developing, including a buy signal on the last shoulder low. That's perfect. Great. And pretty much, well, not quite, but very close on the first shoulder. So, yeah, I'm looking for a bounce, but it's really got to prove itself. And the big pattern I'm disappointed in. Next chart. Wheat, oh my God. New lows, got oversold yesterday. We're bouncing just a little tiny bit today. It's doing almost exactly what corn is doing, or meal. It's now come up to a little resistance level, previous lows a few days ago. And I don't know, it might even stop here for all I care. I'm not getting any damn, oops, sorry about that. I'm not getting any follow through. There's nothing here except oversold. All right, waiting for signals, could bounce a little bit more. That's it. Now, brand new sell signal in cattle today. I warned you about this gap being a possible exhaustion gap, and I warned you about overbought conditions, frankly, for about a week or two. So this is it. We not only came down and closed the gap where we are right now, a tiny bit below what was necessary, but we're still low and last, and it looks like we're about to make new lows maybe. We've only got a few ticks to make new lows. This is an outside down day in overbought conditions with the highest high for the whole trend up. Classic major, potential major turn. That's the best I can say. My first downside objective would more likely be 202-ish. Then I'm looking for, and I'm going to mark that right off. Mark that off right now. So, okay, 202. And there's another line that I want to produce, and it's from over here. So that's it. That's good. That's decent. And then I can't rule out, of course, 190. That's how important this reversal can become. Hogs. Doji inside day, down a little bit on the day. Support is holding. Resistance is giving it a little trouble in the rallies. It's caught in the pig pen between a rock and a hard spot. What can I say? I need a downside breakout, which I favor slightly. Next is Shell. Now, in a resistance area, but starting to close a gap. And looks like approximately 25%, maybe 30% of the gap is closed, but we need to get all the way up to 69.60-ish. And also another level of 69.34 is going to be important from a little smaller gap, but inside the bigger one. So you could say anything from 69.30 up to 69.65 or whatever is probably going to produce a high. Hopefully the big gap's going to get closed. Today being a doji inside day down a little bit, I don't think it's particularly important. Although resistance is giving it a little trouble. Now, we're nowhere near overbought. We're slipping away from 75, remember. Looks like it may be a little dip, but I can't put my finger on it. Now, this is critically important for Apple. Critically important. Here's another head and shoulder bottom formation that is just like I think it was soybean oil. Almost identical. Day before yesterday on Monday, we closed smack dab at the neckline. No definitive upside breakout or failures. Just got up there and stopped. A little bit of a dip below the neckline yesterday allowed the market to pop back again, made new highs closing near the high of the day and well above the neckline. This is the neckline. Shoulder, March 13th. So all of a sudden you realize it's not that big a deal. It's only about a month and a half in size, 2 months. Yeah, a little less than 2 months. We'll call it 2 months. And that's a small to medium-sized head and shoulder bottom on daily data charts. The head of the formation is the low of the market, and that's on April 8th. That was very oversold. Too bad I didn't have a bullish engulfing on that day, or just after. And the last shoulder low, I was able to pick the level for a gap closure, and it turned around unexpectedly, perfectly. The timing is just about right as far as the number of days are concerned, from left to right. Let's just prove it. You start on the low of the shoulder on the left, and you draw a little line and stop at the very bottom of the market. So that is the number of days up, measured by this little measuring stick. You take the left side of it and go to the right, and you're 2 days early. 2 days after it was supposed to happen, it happened with a gap closure, and it turned up. Price levels are pretty decent as well. You have to consider the amount of droppage that occurred relative to the amount of rally that it had after the first shoulder low, and a variety of things like the slant of the neckline and things like that. Pattern is just totally slanted downward slightly, which is fine. I got nothing wrong here. This broke out yesterday. It means that Apple should go up to 262. Let's call it 263 almost. And it also means that we're not supposed to go below or close, definitely not close, below this yellow line, which is the neckline. So I definitely like what I see. We have parameters to work with. And within, what is this, Wednesday? I would not be a damn bit surprised if it made new highs for the trend yet this week. And that's closing above today's high, maybe by a substantial amount. Now, there's going to be a lot of buy stops, probably around 214.5. I'm guessing. That seems to be a pretty important level lately, last 2, 3, 4 weeks. Next chart, we have Tesla going up to and through a little bit of a resistance area on yesterday's market, and still leaving behind 3 gaps, one of which just occurred over the weekend. Today we have a new high again, and a new high close likely up almost $13, and the overbought situation is at an 86. Now that's getting fairly up there. Remember, I start screaming bloody murder if I ever see 90, which I don't very often, and that's why it's particularly important. It's super overbought and means it's extremely likely to top out real damn soon, and maybe at the ballpark that you're looking at the time that it's in the 90s. Okay. I don't think there's a gap there. It looks like there isn't. I just want to make sure. The high yesterday, 37.59, and today's low is 37. Yep. We're about 60 cents below. Today's low is 60 cents below yesterday's high. No gap. Okay. But don't forget, on a downside retracement, I'm looking for 312 down to 306, at least. More likely than not, 291-ish, 290. And there's still a couple of levels below that. But 290 is my most significant support. Next, we're looking at Carvana. It's not stopping. It's overbought. It's making new highs for quite a long time period. I think I've got 3 years loaded, something like that. Yeah. So that's 3 years. And overbought conditions, but no gap today. There is still a little bit of gap left to close from 5758. And at this point, 100% of today's range is above a previous resistance level. We have to consider today, with the closing price highly likely to be well above resistance levels, which it just stopped at yesterday for the close. Today's the breakout day. If this pattern, which is a certain depth from top to bottom or an average of top to bottoms, whatever, works correctly, let me quickly see here. I got a little measuring stick right there. So approximately 440. Yep, 440, give or take $1 or $2, for its upside potential. And now support at about 292.5, a little below today's lows, is a little likely to stop downside technical bounces, dips. But I can't rule out a little lower. That gap is not finished, 263. But in general, some sort of a dip should come to a conclusion at or a little maybe below support, and then have new highs again soon, if this is truly an upside breakout. Next is back to the E-mini, which has had a little bit of a dip here. Well. We have started to dip down below the lows of the day, and we are making new lows for the whole day. Down a full point, not a lot, just very little. And if something is brewing that starts to bubble over, so to speak, it would not be difficult for at least the QQQ and the NASDAQ, especially the QQQ, to have a bearish engulfing ER sell signal today. But it has to get below yesterday's lows. That's the key for these bearish signals. Have a great day and profitable trading to you.